Now, is China ending all paper gold contracts? No. This is one major bank stepping away from certain bank intermediated contracts for individual investors. So here, my friends, is the hidden truth. A bank can raise the margin, it can close the platform, and it can force the contract to be sold. It can change the rules governing your claim. But physical gold does not receive a margin call because you own it outright. Physical silver does not depend on a trading platform remaining open. That's the difference between exposure and ownership, between a claim on the asset and the asset itself, and between being permitted access and actually possessing the gold and the silver itself. And it's a great question. We need to take a look at it because we've been in this shift from the paper markets controlling the visual price to the physical markets. But if Chinese banks are dramatically increasing margin requirements and restricting access to certain gold contracts, I guess the question is China killing the paper gold market? And could this help that shift that we've been talking about of gold toward a truer supply and demand price? Those are very important questions. But before we answer them, we need to really separate what people think happened from what actually happened. So let's look at the announcement itself. This is the announcement from the Industrial and Commercial Bank of China, the ICBC. And they are indeed suspending individual access to certain gold and silver contracts traded through the Shanghai Gold Exchange. Customers were told to close positions, sell, take delivery where permitted, or withdraw their margin funds. Before that, margin requirements had already been raised above 100%, effectively removing much of that leverage. Now, is China ending all paper gold contracts? No. This is one major bank stepping away from certain bank intermediated contracts for individual investors. But, frankly, the distinction matters. Remember, I was a stockbroker, and so I understand the purpose of futures, options, margin, and leverage. These tools can provide liquidity and price exposure as well as risk management. But exposure, that ain't ownership. A trader can control gold through a contract without buying or removing 1 ounce of physical metal, not 1 ounce of physical metal from the market. That creates demand for the trade, but not necessarily demand for the gold. However, as leverage is removed, some traders will leave and others may be forced to close positions. So that could pressure the paper price in the short term. But then what happens? Well, let's think about this. If physical demand remains strong while leverage trading becomes less dominant, then the price may begin to reflect actual physical supply and demand more honestly. Will one announcement kill paper gold? No, of course it won't. These markets are global, and they include futures, options, ETFs, swaps, forwards, and unallocated accounts. But quite honestly, I do believe that this is part of that larger transition. And these things take time. We're seeing a clearer separation between trading gold contracts and owning the physical gold. And that transition could be very volatile because the old pricing system it's not going to quietly surrender its control. So we've talked an awful lot about what's going on in all of the different markets and how they're connected. I do think that what we've been looking at on the economic stories all along, whether it's AI or anything else, these trades are being rewritten around control and security. But security for who? That's what you really have to ask. You know, we see oil above 100, below 100, boom, whipsaw, day in, day out, right? Energy is revealing the limits of central bank policy. The AI boom is revealing how much modern growth depends on debt, and we're at levels of debt that cannot possibly be repaid. And Wall Street itself is beginning to question whether debt can continue serving as the financial system's stabilizing anchor. Do you get that? Because we went from a finite and demanded and functional asset that created restrictions on how much money could really be created, how much debt could be created rather, because this is money in the asset itself, to this claim. And it doesn't matter whether it's a Zimbabwe dollar or a US dollar or any other name of a fiat money currency. But it always goes back to the stabilizing anchor of gold. Always. Not because gold solves every problem, and not because you should react emotionally to every single headline. Don't. Understand the truth. Because when promises multiply and the rules surrounding those promises continue to change, direct ownership becomes increasingly important. Gold and silver in your possession is more important than it's ever been. But preparation is not panic. It's understanding. It's asking what you can own, how you own it, and what has happened for you and to you to enable you to maintain access to your money. So if this helped you see some of the hidden truths, please give us a thumbs up, make sure you subscribe, and share with someone you care about. If you want to, feel free to continue the conversation with our strategy specialists. We're all here to serve you. They're here to help you examine your own foundation, ask the right questions, and make well-educated decisions that, put your best interests first. What a concept. Because when the anchor is changing, knowing what you truly own with no counterparty risk, that matters more than ever. And I also know getting redeemable gold back in the global monetary system gives the public their power back. And we better do it. And we better do it now. This is the opportunity. And I 100% know. While one person can't do anything, together we can do anything, and we can get redeemable gold back in the system. And remember, it can start with the dime card. If you're a client, you get them for free. After that, our cost, because you're the Army. Let's make this happen. And until next we meet, wherever you are in the world, please be safe out there. Bye-bye.